on their credit, or their debt to income ratio is a little lopsided. And so it's really important for those clients to have a plan. If they can't get something now, we don't just abandon them. I set them up on a plan, like how can you take care of these old debts or these things in order to build your credit score, and then let's talk in a few months and see what progress you've made. It's really important for us, and I feel like it really creates a bond and a faithfulness with the borrower. When I help them get to the finish line, they're very faithful to me. They're a very great referral source. So it's just really important for us, and in our company, it's a family atmosphere. My brother is our branch manager. My sister-in-law is a processor, and she's also a loan officer. So we get it. And I was sharing earlier, one of our processors' father passed away this week, which is unfortunate. But my sister-in-law went into the office at 5 o'clock this morning to work on her files until about 8 or 9. Then we had another processor come in this morning and work until noon. You just won't get that level of service in traditional lending. And that's really, really why I believe I'm still in the business for 17 and a half years, as opposed to the people that are no longer in mortgages. You know how many realtors and how many lenders are no longer doing what they did 5 years ago, and it's, I think, a result of that level of service and commitment. So things that set us apart, you'll see on my flyer, we have 0 down payment purchases, which is the VA way. They can put money down, and if they do, they get a reduction in the funding fee. I don't know how loan savvy you are, and if I'm boring you, just stop me. But basically, VA gives this benefit of 100% financing, and they have a funding fee, which is like an insurance protection incentive, basically, in case the veteran defaults on the loan. VA loans are the least defaulted loans of any of the loans, conventional, FHA, etc. The veteran loans have a better...
So, I missed that the other day. If they put money down, their funding fee gets...
It's reduced. It does not ever go away. The only way there is no funding fee is a level of disability. So if they have a rating with VA as with a disability, then the funding fee is waived completely.
What percentage of disability?
That's a good question. I'm going to tell you that my processors know the answer to it. It does not have to be 100% or no. I believe it's 10% or more, but
Wow.
don't quote me on that, because what they do is they go into VA system, they upload the DD-214 information, and we get the certificate of eligibility right in our office. It's all online now. We don't have to mail it away anymore, which is beautiful. It will also show if they have any outstanding VA loans that haven't been tied up that we need to take care of. But I love that they waive that fee. We also coach our realtors and our veterans if they have a low amount of cash. We talk to them about having the seller pay their closing costs, because that is allowed. Many lenders will tell you it's a maximum of 6%. In real life, there is no maximum if it's customary for that area. So, another thing that's really important, real estate side, in the old days, if you heard of a VA offer coming in on one of your listings, you were a little apprehensive because the non-allowable fees, there's fees a veteran's not allowed to pay. Underwriting, processing, courier fees, things like that. Termite inspection. Now the veteran is allowed to pay those fees. Not that it's always going to work out that way, because a lot of VA contracts, the seller is paying those fees. But from the listing side of selling to a veteran, they've sweetened the pot a little bit, because now people aren't resistive to selling to veterans because they know they're going to get hit with those fees. It's really important to know that the veteran's allowed to pay 1% of their loan amount towards their fees. So it reduces the blow a lot when it comes to the seller having to compensate for a veteran buying their house. We do VA construction perm loans, which are fantastic. They can pick a lot. They can pick a builder. We get their builder approved with the lender, and they're building a house with 0 money down. And now, in real life, the builder's going to require an escrow deposit, and there's going to be an appraisal and things that need to be paid for. But for them to have the luxury of picking out a lot and picking out a builder, that's huge. Those have not been around in a long time. We have credit scores on existing single-family homes down to 600, which for a long time they're at 640 or higher. So that's huge also. They might just have limited credit. It might not be that they have derogatory credit, just not a lot of it. We can go down to 600. Things that make us different from our competitors. We are strictly mortgages. We do not deal in banking at all. They're not competing on voicemail, push this if you want this, push this if you want that. That's not real life in our world. Our world is you contact your loan officer, which is me. Everyone gets my cell phone number, period. You mentioned weekends and evenings. I change my voicemail every single day, even on weekends. I want people to know if I'm in meetings all morning that it might be an hour before they hear from me so they don't think I'm blowing them off, because so many times when they're pushing, they never know if the person got the message, etc. I'm a big church goer. I love church. My kid goes to church, so ultimately if I'm in church and it's a Sunday, I will typically text back and say I'm in church. I'll call you when I'm done. There's some sacred times with my family that I honor them and protect them as a result of me being in the business I'm in, but there's always acknowledgement, okay? Our local processing team is in our office. I was mentioning earlier, so many of the traditional lending institutions, you go in, you sit with their mortgage designated person, they take all your information, and then it goes into the black hole. It goes to Chicago, it goes to Minneapolis, it goes wherever. We have over 50 years of experience with 3 processors right in our office in Merritt Island. We scrub every file to make sure there's nothing weird or scary that's going to sneak up on us. And our files within our lending system have less touches than any other of our branches because we do everything on the front end. When they come out of underwriting, they have way less conditions, which makes it smooth, makes it nice. Our HUDs are usually, HUD is a closing statement. Our closing statements are delivered to the client prior to closing. There's at closing, oh, by the way, this is what you need to know. We go over them line by line, and then I go to my closing with my client and answer the questions. Yes way, 17 and a half years.
That's amazing.
Now, if it's not,
That's a first for me.
really?
Yes.
You
Okay.
know what the law is? The law is like, what, 72 hours? Is that what the law is?
Well, there's really not a law about a closing statement delivery, and many lenders wing it in. There are certain things that have to be disclosed at least 72 hours prior to closing, like the appraised value of the property and things like that, so people aren't making hasty decisions. But if you talk to title companies, 99% of them are getting the package the morning of closing.
An
And,
hour before.
right,
No way.
Yes.
That's,
Oh, yeah.
that's not
yes
cool.
way.
Yeah.
And I'm gonna tell
Typical.
you, in fairness
I
to-
would have said, nope, you know what, I need to sleep on this, I'll come back tomorrow.
I always
Well,
thought it was a
you're almost
24-hour
They're
period of time you're supposed
supposed
to
to.
have to review the HUD one.
They are supposed to, and there are many situations that play into that, and I'm not gonna say that we have never had a closing package get there the day of closing, because you have to keep in mind all the parts that are associated with a loan. There's stuff realtors do, there's stuff the title company does, there's stuff we do, and the borrower has a huge responsibility to get us their stuff in order to close on time. So in our office, and many offices are different, we have a timeline on every file. So when we ask Mr. Brown for his pay stub on the 12th, and then we call him again on the 13th because we still don't have it, and then we follow up on the 14th and we still don't have it, then I poke at the realtor and say, Mr. Brown isn't turning his stuff in on time and we may not close on time.
What
Okay?
about the good faith estimates? Do you give the?
Oh, those have to be issued immediately. When I do a loan package, it's there. And again, it's supposed to be done within 3 days of loan application. Ours are issued immediately. They get a fee
Very good.
sheet. The new good faith estimate is different than what you're thinking. The fee sheet is what we used to call a good faith estimate. It breaks down every single fee, who it goes to, what's
And it's called
expected
a
on
fee
closing
sheet?
day. Yes. Good faith estimate tells the terms of the loan, and it tells all transaction fees, even the seller paid stuff, not real estate commission, but owner's title, doc on deed. So the good faith is.
So they actually changed the name of the good faith estimate?
They did. They did
Wow.
about 3 or
That's
4
awesome.
years ago. Yes, yes. So
Yeah,
all of
okay.
that stuff has gone through in our office. I go to my closings. I'm sitting there with the veteran closing. I'm sitting there with the FHA borrower closing. I'm sitting there with the conventional closing. If I can't go, typically someone from my office will attend. If it's out of our county, then basically I'm going over the closing statement with them ahead of time, and then I'm available on my phone. I know they're closing at 3 o'clock in Jacksonville, and I've got my phone next to me in case there's any
How
questions.
soon are they closing,
Stacy,
Stacy?
hold on just a moment. We've
Sure.
got another board member.
Sure.
Hello, Richard.
Not a veteran.
Okay, yes.